disconnected from reality. He says Canada would be the best economy in the G7, yet he's delivered the worst. 100,000 jobs gone in 2 months. And here's Canada's G7 record. The only shrinking economy, the highest food inflation, the highest household debt, the second highest unemployment. He continues to point to global pressures, but every other G7 country is facing the exact same problems, yet their economies are growing and ours are shrinking. This is a domestic failure made in Canada by this Liberal government. When will they reverse their economic policies that are failing Canadians?
Minister of Artificial Intelligence and Digital Innovation.
Mr. Speaker, the opposition wants to close their eyes and have a fantasy that the trade war will go away, that the tariffs will go away. Doesn't work like that. You got to have a plan. You got to invest in your workers. You got to invest in affordable housing. You got to invest in national defense. You've got to invest in Canadians and their workers, auto parts, like we're doing with federal economic development, many in conservative ridings. Mr. Speaker, let me boil it down simply. They got to believe in Canada, buy in Canada, and build in Canada. They got to try that.
I thought they're so eloquent when it comes to their speeches, but none of it actually ends up playing out the way they say, because everything he said sounds nice, but they're not actually doing quite literally any of it. Anyways, today is Thursday, March 26th. My name is Miloš Krajčnik. This is the Canadian Sovereigntist. Sorry. I'm kind of conjoining two stories today. What I'm going to do is we're going to go through Tiff Macklem's speech, kind of break it down. And I found this article because it really ties in to what's happening on the, let's say, on the national level, on the federal level with the economy through interest rates and all of that. And this is really how it translates into the impacts on everyday Canadians. This article right here. I'm not going to actually read the article. I'm going to focus a little bit more on Tiff Macklem's speech. So guys, what we have here is this week we had a financial planner guy that made rounds in the Globe and Mail telling Canadians that hoarding cash is irrational and that inflation will quietly erode their savings. He's technically right, guys, but he's giving the right advice inside the wrong system, guys. And on March 18th, the governor, you see him on the screen, of the Bank of Canada stood up and described an economy that's with deteriorating growth. We have rising unemployment and the consumer is being squeezed. He says it. He says the people are being squeezed and the inflation is tilted to the upside. And Canadians aren't hoarding cash because they panic. They're hoarding cash because they're paying attention. They're listening to the news. They're seeing doomsday news and they're saying we need more cash in our pocket. Let's get into it, guys.
Economy continues to face heightened uncertainty related to U.S. trade policy and geopolitical risks. Now the war in Iran has added a new layer of uncertainty. Its impact on the global and Canadian economies will depend on how long the conflict lasts and the extent to which it spreads across the Middle East. Inflation in Canada has been close to the 2% target for more than a year now. But as we've seen, the war in Iran is causing oil prices to move sharply higher, and this will push inflation up in the near term. Canada's economy is dealing with a lot, and we now face more volatility. The Bank of Canada's role is to be a source of stability. We're supporting economic activity while ensuring that a jump in energy prices doesn't turn into persistent inflation. So let me expand on what we've seen in the economy since we published our January monetary policy report and what we see ahead. Recent data show the Canadian economy remains in excess supply and is growing slowly as it adjusts to U.S. tariffs and uncertainty. After growing 2.4% in the third quarter of last year, GDP shrank by 0.6% in the fourth quarter. This was weaker than we forecast at the time of the January MPR, but that's mainly because inventories were drawn down more than we expected. Domestic demand actually grew by 2.4% because of the strength in consumer and government spending, although housing was weak.
Just a quick interjection there, because strong government spending and consumer spending. So we're seeing look at this contradiction. People are hoarding cash, but we have stronger consumer spending. It's all government spending. The government's funneling money. Government's funneling money into these spending sprees that we don't really see the effects of. Where are they spending the money? Where are they spending the money? They're saying housing. Their projection, they spend billions of dollars on housing. They only built like 2,000 houses. That is such a minuscule amount of homes that have been built for the general housing supply issue that exists in Canada today. So where is all of this government spending going? Where is all of the money going? Please tell us, Mr. Governor.
Early 2026 suggests the economy is expanding again, but at a slower pace than we had forecast in January. The labor market remains soft. The job gains we saw late last year were largely reversed in the first 2 months of 2026, and the unemployment rate rose to 6.7% in February.
But consumer spending is going
Recent
up.
trade data have been volatile, but they suggest growing weakness in exports.
So, guys, I want to stop and deliberate right here a little bit more, guys, because it's I think it's good place to kind of unpack what Mr. Tiff Macklem said. He's saying that Canada's economy, guys, is dealing with a lot and now faces more volatility. And let's just kind of sit with what that means, because the GDP contracted in Q4, guys. The recovery is slower than the bank's own forecast. Job gains from late last year were fully reversed in 2 months, and unemployment is at 6.7%. Exports are weakening, and this isn't a temporary shock, guys. Layered on an unhealthy economy. This is a structural deterioration, guys, that was already in place before the Iran war added anything on top of it. They've created this structure of collapse, guys. And in the article, the Globe and Mail article, they say that 67% of Canadians who told a TD Bank they plan to cut spending in 2026 made that decision before February 28th. So before this whole oil shock business existed, they were already planning on cutting spending. So, and before this speech as well. So they were already reading these signals, guys. Macklem just confirmed all of this publicly on March 18th, guys, and the cash hoarding is not irrational behavior that needs correcting by a financial planner in the article, guys. It is the rational output of an economy the governor of the Bank of Canada just described as weakening in every direction. He literally just said everything is slowing down. But we have a financial planner saying, guys, hey, don't be afraid. Don't be afraid. Just put more money in the economy. Okay, guys. I don't know. I don't know what to do with that information.
Inflation eased further to 1.8% in February, down from 2.3% in January. CPI inflation, excluding taxes and measures of core inflation, have also come down and are all now close to 2%. Food inflation, however, remains a problem. Food inflation slowed in February, but is still elevated. The recent sharp increase in global energy prices is causing higher prices at the pump, as we've all seen, and this will push inflation up in coming months.
I love how Canada has, we have inflation at the pump, but we have the fourth largest oil reserves in the world. This should not be an issue. The whole world should be blowing up in energy inflation, in gas prices. In Canada should just be remaining stable because we have our own oil. We should not be this susceptible to these types of price fluctuations.
It's still too early to assess the impact of the war on growth in Canada. If higher oil prices are maintained, this will boost incomes from our energy exports. At the same time, higher oil prices squeeze consumers, leaving them with less income for everything else. Beyond the jump in energy prices, the war in Iran will affect households and businesses in other ways. Financial conditions have already tightened. Global bond yields are higher, stock markets are lower, and credit spreads are wider. Transportation bottlenecks caused by the effective closure of the Strait of Hormuz could also impact the supplies of other commodities, like fertilizer.
And I need to stop here because he's He's talking about prices of things that we own in abundance. Fertilizer. Canada is the largest potash exporter in the world. We have the largest reserves of potash in the world. In the world. Guys, in the world. We have the fourth largest oil reserves in the world. We have more than Saudi Arabia. We have more than Norway. We have so much. We have so much. But yet, we are this susceptible to price fluctuations on the global scale. Our domestic economy should not be absolutely dealing with the way this is the reason why energy prices affect food prices is because of supply chains, because it costs more money to ship the goods here and there and to and from and all of that. The same thing with the fertilizers, because again, you need to ship the goods out. But that wouldn't exist. That wouldn't be an actual problem if Canada built sturdy rail transport cross country, if we built the pipelines for energy, if we were actively only supplying ourselves with our own energy. That would never happen. We would be able to cap the price of oil to a certain point nationally. That makes it profitable for our own businesses, for our own oil conglomerates domestically to pump at certain prices, but they can still manage to export at whatever, right? But he says it here, guys. He literally just said it. Higher oil prices boost income from energy exports, but squeeze consumers, leaving them with less income for everything else, guys. That's the entire sovereignty argument in one line from the governor's own mouth. And Canada produces the oil, guys. I said it. And the income goes to energy exporters basically exclusively, and the squeeze always goes to the consumers. The little guy is always the guy that gets screwed, guys. And the financial conditions are already tightening, which means bond yields are up, mortgages are more expensive, and credit is harder to access, and the stock markets are lower, which means the retirement savings and the investment portfolios Canadians were told to rely on instead of cash are worth less than they were a month ago. And the fertilizer bottleneck just means that food inflation that is already elevated is going to get worse in 6 to 9 months from now. Guys, he's painting a very bleak picture for us, but, being like, hey, guys, chin up. And then you have this financial planner, guys. He's saying in this week's article, he's saying inflation will quietly erode your cash savings. Yeah, of course he will. But the alternative he's pointing to is just invest in the market that's already down, guys. In mortgage rates that are already rising, in an economy the governor himself just described as being squeezed from every direction simultaneously, guys. Staying in cash is not irrational when every other instrument is also taking damage.
In its monetary policy deliberations, Governing Council is considering both the most likely path for the economy and inflation and the risks to the outlook. Uncertainty is acute. Trade and geopolitical uncertainties remain, and the conflict in the Middle East has broadened the range of possible outcomes. Relative to our January forecasts, risk to economic growth are tilted to the downside. Near-term growth looks weaker than expected, and the review of the Canada-United States-Mexico agreement is still a big unknown. At the same time, risks to inflation are tilted to the upside because of the sharp increase in energy prices.
I gotta stop it here, guys, because I think this is a key place to stop. Look what he's saying, though. Growth tilted to the downside, inflation tilted to the upside, and uncertainty is skewed. That is the governor of the Bank of Canada describing stagflation risk in plain language without actually using the word. He's describing it so that he doesn't create panic. Because if he goes outright and says, guys, we're screwed, there's going to be panic across the commercial banking sector. So he's not saying, he's going at it in a roundabout way, guys. And inside that environment, the financial planner, Simon Wong, of this article here, he's telling Canadians to keep investing in fiat-denominated instruments, guys, managed by these same institutions operating inside the system Macklem just described, guys, as broken in both directions. Guys, the advice is technically correct in a functioning system, but this is not a functioning system, guys. What actually protects purchasing power when growth is falling and inflation is rising is a store of value that sits outside of the fiat system, guys. You need to be outside of that fiat system to protect yourself. Gold and silver does not generate yields, guys, but it doesn't need to, guys. It doesn't need to. All you need to do is protect your wealth. That is the key. It's gold and silver are an actual mirror of the health of the economy. They're inversely related. When there is high trust in the system itself, in the banking system, in the government, like in the 90s, gold was very low. Doesn't matter that we were going through a recession. Gold and silver, they were very low. Why? Because there is high trust in the society. Inflation wasn't, money printing wasn't a massive issue, and so they were low. As money printing and inflation kept getting bigger, what happens? The value of the dollar goes down and the prices of gold and silver go up drastically. And so 100 grams of gold purchased 2 years ago in Canadian dollars has more than doubled, guys, in value. If you held $100 in cash in a checking account, you lost your purchasing power every single day that it sat there, guys. Canadians are not financially illiterate for hoarding cash. That's basically what they're saying in this article over here. They are responding to a system, guys, that was never designed to teach them what to do when the governor tells them growth is going down and inflation is going up at the same time. That is not a personal finance problem, guys. That is a structural one, guys. And I'm not trying to go here and, this isn't like financial advice, obviously. I'm not telling you what to do, but I'm just going to show you this chart right here. The prices of gold over the last couple of years, as you can see down here. We have from July 2021, where were we at? We were at like $1,700 an ounce. And in January 2026, we hit $5,000. Why? Because the economy has gone to shit across the board, guys. And it's a very similar thing with silver. If you guys don't have the money to buy grams of gold, go ahead and buy grams of silver. You're going to protect your wealth. It holds its value, guys, because the fiat system is collapsing. Cash is becoming worthless. And so if you actually want to protect your wealth from inflation, from eroding in inflation, you need to hold it in a type of asset that's not going to do it. That's not going to erode. Right? And these are great. I personally have some. I'm not advising you guys to do anything, but you have to look at it that way because the system isn't made to help you protect yourself. It's not. They're making money off of the spread between inflation and what the mortgage rates are. That's the money. That's added cream on the pie that they're putting on. This is how you can protect yourself. Just saying. And why all of this matters to Canadians is because Macklem stood up on March 18th and he told Canadians that growth is tilted to the downside, inflation is tilted to the upside, and uncertainty is acute, guys. A week later, a financial planner is telling those same Canadians that hoarding cash is irrational and they should stay invested in the system. Both things can actually be true at the same time. Cash does erode, and the alternatives are also taking damage inside a system the governor just publicly described as broken in both directions simultaneously, guys. The real question is not whether to hold cash or invest. It is why Canada has never built the sovereign infrastructure that would give ordinary Canadians a buffer against exactly this kind of moment. Norway built a $2 trillion fund. Alberta raided its heritage fund every time the budget was tight. And that was because of the federal government, guys. Macklem can describe the problem in precise detail, guys, but he cannot fix what was never built. Let me know what you guys think in the comments below. I'd love to hear your thoughts. Please like, share, and subscribe. Stay informed, stay curious, and God bless Canada.
This is Canada. Maple syrup and like Captain Say.